Good morning. This is Ken Long from Tortoise Capital Management. It's November 13th, 2010. And I want to look at part 2 of our 60-minute candlestick analysis here. In the previous part, we looked at a 10-day look back. We're going to look back 30 days here. And this first block is roughly the 10 days that we looked at on the first video on this subject, and we saw how the lower highs and look like a change of trend. So now we're going to look back 30 days. And the first thing I did when I looked at this, I was struck by these pseudo Darvis box named after Nick Darvis, a dancer who made a lot of money trading the market in his own way. One of the first books on trading I ever read as a kid. Still influences me to this day, and I tend to look at things in terms of Darvis boxes, which is a trading range that, when violated to the upside or the downside, gave him insights about what may happen next. And so the first thing I look at is in that period of about minus 30 to minus 20 days, I see this box right about here. And the first hint that it wanted to go higher was that little gap. Now it failed. Looks like a little gopher sticking out of or prairie dog sticking out of the ground, but you can still see that it finished strong, and it went from lower left to upper right in that box. The next box that I drew was this one. We had the second breakout followed by a third breakout, then the election, and then a nice big run up to 122. Now this box is about as big as the previous box, just so happens. That's kind of an interesting, and so now that leaves us with this third box, or this brick in the wall of a support level now at 119. Sort of seems important to me based on just that. Now drawing trend lines on this little exercise I found to be kind of instructive, because I was concerned about what's the nature of this pullback. Is the market rolling over? How far back can it go? You'll see some discussion of that in this weekend's market commentary. But if we said roughly that this green line represented something like a regression line, or the general summary of that trend, and then we said perhaps that this red line looked like the roughly the midpoint or the regression line of the pullback of the last 4 or 5 days. It looks like perhaps the market trend has changed. But my sense is that if you just extend this other line out, and you say if we hadn't had this anomaly of such a large gap, where would price have gone based on normal momentum? And I find it kind of interesting that we're in this zone here. That we're sort of at a natural spot for the trend line. If there still is power represented by the buying interest here, that we'd have gotten to this area anyway, and that's where we are. And if it had been a straight line function, we'd have no compunction at all about continuing to reward momentum. So I look at this so far as this is about a 3 to 4% pullback, normal noise, and this is a natural buying area upon resumption of that trend. So this is one of the reasons I like looking at 60-day, 60-minute candles. They give some pretty interesting insights. I think if we said that was sort of this red line represented a support level, then we can already see a 2 to the upside. If we said a simple retest of the high up here, we can see that we've got pretty easy to see a 2-to-1 reward to risk ratio in here. So buying on dips is certainly warranted. Well, that's all for this morning. Wishing you a safe and pleasant weekend, and good hunting.